Hey everybody, Economic Ninja here. I want to talk today about mortgage-backed securities, and you're probably wondering, the acronym for them are MBSs. You're probably asking why I want to talk about that, and the reason why is because I want to give you a little bit of baseline knowledge about them and understanding, because I believe in the next few months you're going to start to see this come out in the news. And even though a lot of you are probably saying, yeah, Ninja, but MBSs are a thing of the past, this is what took down or almost took down the global economy when Lehman Brothers collapsed. But I do want you to understand that they have not gone away. They just have a different name. So we're going to talk about mortgage-backed securities, okay? So first off, to explain how this works I actually had to write down some notes because I want to make everything as clear as possible with you guys. First off, this is how they work. A bank lends you money for a home. You buy a home, and they collect monthly mortgage payments. Now, it doesn't always mean a bank lends you the money, but there's a difference between the bank that lends you the money and a loan servicer, okay? A loan servicer is a company that actually takes the payments on behalf of the lender, okay? Because not always does your mortgage, the amount to buy the home, come from a normal bank as you would think about it. It comes from a lending institution. And so a lot of the times they'll have a servicer service these loans because of the sheer amount of times that these contracts get sold on the market. We'll get to that in a second. So the loan servicer or the bank takes in your money in payments. They do that with a lot of other banks too, right? A lot of other lenders. So one bank or one financial institution may have out tens of thousands, maybe even hundreds of thousands of mortgages, okay? So each month they're taking this in. Now, these loans are sold to a larger institution, a larger bank, that then will package all of these loans together and they'll package them into a mortgage-backed security. The larger bank issues shares of the security, and these are called tranches, okay? You've probably heard that term from the movie The Big Short. If you haven't seen it, I highly suggest you seeing it. However, I wouldn't let children watch it because there's some profanity and some adult content in that movie. But I think by and large it's a great movie because I love that a lot of it was time-stamped. So just so you know, the word tranches actually is a French word, which means slices. So they're slicing up pieces of the pie, okay, because you've got tons of these mortgages in one mortgage-backed security, and then they slice them up and they sell them to investors. Now, a couple things you want to think about is they like to salt these mortgage-backed securities with really high-quality people with high caliber great jobs, great credit scores, and they're paying well, right? Because we know that not everybody that has a mortgage is always the best at paying that mortgage. Just because you qualified at one point in your life to have a home that you technically couldn't afford because you don't have the money doesn't mean that you're always going to make the payments after 1 to 10 months, okay? Life happens, and sometimes in my opinion or in my past I've came across people that could make mortgages, but because they felt like they shouldn't have to or they didn't need to anymore because of outside, let's say, effects, for lack of better terms, they just decided not to pay, okay? So when the banks are bundling up these mortgage-backed securities, they want to make sure that there's a certain amount of really high-quality borrowers in there to give that mortgage-backed security a good credit rating, okay? Investors that buy them ultimately collect the dividends in the form of monthly mortgage payments, but it comes like in a dividend like interest, similar to like an interest payment, okay? So this is where you hear of the word REITs, which stand for Real Estate Investment Trusts, okay? This is a way to invest in the real estate market without actually doing all of the hard work. So you don't technically own anything. You own the income that would be derived from the mortgage payments, okay, the profit. So these tranches can be further repackaged and sold again as other securities as well too. So you could have an MBS that's split up into a bunch of different slices of pie, and then those slices of pie can be pulled out, put together with other slices of pie, and imagine you've got a pie now of a lemon meringue, key lime, oh my goodness, toasted coconut. I'm getting hungry. I love pie, if you couldn't tell already. Now, these tranches, when they're packaged together and you got this pie of multiple different types of pie, these are now called collateralized debt obligations, or CDOs. Now, this is the point where I said in the beginning that you're going to start seeing this coming out in the future because they've been repackaged and renamed. And that is what we're talking about, CDOs. And to give you an idea, the CDO market is bigger than the MBS market was in 2006, 2008, okay? And this is why I've been saying we're going to have some issues in the future. And I don't want this video to go too long, but I will say one thing that people need to understand is that these collateralized debt obligations, and they also have CLO, collateralized loan obligations, are exactly like MBS's. They're packaged a little differently. They gave them a new name to make you think they're not there, but they're sitting inside of just about every pension fund in the country. So if the market turns and we start to see a event similar to the 2008 Lehman Brothers crisis, which I believe is around the corner in the next couple of years, and don't take this as financial advice, okay? This is just a guy that sees these cycles coming and can usually put the nuts and bolts together for people. I believe you're going to see this just all of a sudden, like it'll be like this, what just happened, but it shouldn't be surprised to anybody that subscribes to this channel. So MBSs are alive and well. They now have a different name, either CLO or CDO. And I think it's going to be a big issue in the future as this market turns. So I wanted to give you that little baseline of information. I hope this helped you. Sorry, you can see why I needed some notes on this one because it's a lot to take in when you're just staring at a camera. But let me know if you guys have been studying the collateralized debt market. It is a big deal, I think. I think you're going to see it in the news by December for sure. It's going to be like, the new thing that everyone's talking about. And you heard it from the Economic Ninja first. So if you guys got something out of this, please like, share, subscribe. I really appreciate you guys. Thank you for your time. With that being said, the Economic Ninja is out.